Hello everyone, welcome to another video of CMA US Part 1 Section A. In today's video, we are going to start a very interesting topic which is about the introduction of fixed assets or introduction of PP&E, property, plant and equipment. Now, first of all, what was the problem? So the problem was there that once a company, an organization, they purchased anything worth rupees 5 million. They purchased anything worth rupees 5 million. Now when they purchased it, apart from that, there were certain other costs like installation, testing costs and maybe any other operational kind of cost like the freight cost, the transportation charges. So the problem was that whether they should include these costs in the value of that particular asset, or they can expense it immediately, or they can expense the cost of the machinery which they have bought immediately. So that was the problem, and hence this particular topic, this particular chapter of fixed assets, or to be precise, the chapter which we are studying, the property, plant and equipment, came into the picture. Okay, now property, plant and equipment is a major asset that is reported on our balance sheet. PP&E goes where? On my balance sheet as what? As a asset. As a asset, and this is of a huge value. This is of huge value, right? So that is why this is important for us to get it at the correct value. At the correct value. Okay. Moving on now. So why do we have this particular framework? So first of all, assets usually which we buy like property, plant and equipment, it is for long term period, that it is for more than 1 year, right? Then it is gonna help us in generating revenue for many years. So when this particular asset is helping me in generating revenue for multiple years, then why should I recognize the entire cost of buying that machinery in just one single year? For example, if I bought the machinery in year 1 and I'm gonna use it till year 10, is it fair to expense the entire cost in year 1? No, right? So it's better to spend small portions till year 10, right? To spend the small portions every year in order to ensure that we are we are following the matching principle concept of accounting. What is the matching principle concept of accounting? This particular principle says that the revenue and the expenses related to that should be reported in the same period on our financial statements. So that is why how to account for this particular expense related to my asset which I have purchased, I will charge depreciation. I will charge depreciation which will reduce the value of my asset by small amounts every year. Okay. So in that way, what will happen? The revenue which I generated by the virtue of the asset, with the help of the asset, that will be expensed. In 1 year and also in subsequent years continuously. So that will ensure that my matching principle concept is there. Then also it prevents manipulation. Why? So now when we have this standardized framework like that, what does that mean? That if we have certain rules and regulations, regarding what? Regarding how to account for the PP&E, so what will happen? That there will not be any manipulation in the books of accounts. That means the people who are doing what, who are making the books of accounts, who are preparing the books of accounts, they cannot show this particular asset in whatever they want. Why? Because we already have these standardized rules. Okay. Now, what is the definition of a long-lived tangible assets? As the name says, long-lived. It's gonna be there for many years. Then tangible assets means what? Anything you can see and touch. Like this particular pen tab, we can see and touch. But goodwill, is goodwill a tangible asset? No, we cannot see and touch. Patents, copyrights, trademarks, is this a tangible asset? No, not at all. Then coming to the characteristic 2, it has the long-term benefits. It has the long-term benefits. That means it's gonna benefit us for many years. It's gonna be there with us for many years. Now whenever we have these PP&E, property, plant and equipments, we will have the wear and tear. Wear and tear means what? That means that it's not gonna be the same like always. There's gonna be like, some damage to it. Like if we have the car, or maybe if we have any vehicle at home, obviously when we go out on the road, the tire will get old, then there could be some scratches on my this vehicle. So that is the thing related with wear and tear, that is caused by the usage. Okay, one exception of this is what? Exception is of raw land, which never depreciates. That means land is never ever depreciated. Land is never ever depreciated. We all know that we buy land, our parents buy land or property for investment purposes. Why? Because first of all, it is a kind of a resource which is very less in amount, like very limited in nature. So the number of pieces of land in the world is, obviously we have a lot of lands as of now, but again it's limited, but the value of land is gonna increase, and that's how it's seen as an investment. So that is why land is never ever depreciated. Now, coming to the principle of historical cost, what does this mean? That assets they are reported at historical cost less depreciation on our balance sheet. Okay, what does historical cost means? In historical cost, the purchase price of the machinery or maybe the asset, the cost we paid to install it, the transportation cost, and any legal fees or anything associated to that particular machine is gonna do what? Is gonna be included in the cost of that particular asset. Now, cost incurred, so basically what all do we include? So any cost incurred to make the asset fully operational. Cost incurred to make the assets fully operational, that is what is included. Now we have different kinds of assets. We have buildings, we have machinery and equipment, we have land. So when we are capitalizing it, what does capitalizing means? What that means? We are showing it on a balance sheet as a non-current asset, So in that case, what all costs should be included? These costs for buildings, these costs for machinery and equipment, and these costs for land should be always included when we are calculating what cost to include on our balance sheet for a particular asset. Coming to the one crucial rule, one important rule related to the land. Now what happens, like suppose whenever there is a piece of land, and on that piece of land there was some timber, maybe maybe there can be some kind of wood, or maybe we are clearing it off, any scrap is there. So when I am doing what? I am selling off that. I am removing it. So what will happen? The value will go down. In order to explain it better, let's understand. So whenever we sell the clear timber or the scrap value, anything which is of no use, we remove from the land, that is first of all not recorded as a revenue. That will not go on my income statement. Okay, what it will do? It will credit my land account. That means it's gonna reduce the value of my land, and we are gonna debit the cash, because after selling off those scrap things, we are gonna get cash in exchange. And it is wrong to show it as other income or miscellaneous revenue. It's not to be shown as operating income, other operating income, or miscellaneous revenue. So salvage proceeds must be treated as a direct reduction of the land's capitalized value. Whatever land value is there in my balance sheet, from that we are gonna reduce the scrap value. Whatever scrap we have sold, whatever cash we have got, that has to be removed. One very important examiner twist is mentioned over here. This is important, guys. So what is mentioned over here? That this particular sale of this land clearing sales, whatever we are doing, is reported under other operating income. Is this correct? Not at all. Why? Because it is treated how? It is reducing the value of my land. Then post acquisition enhancement versus routine maintenance. Now after we have bought it, post acquisition means what? I'll just keep my pen tab properly. Yeah, post acquisition means what? After purchase. After purchase. After purchase we have enhancements and we have routine maintenance. So any cost which I will be spending on my asset once in a while, maybe once in a while, that means it's not going to be there for frequently, that cost has to be capitalized, provided it increases the usefulness of my asset and it also enhances my productivity. Whereas if any cost which is there on a recurring basis, which is spent frequently or maybe every year, like routine maintenance, annual insurance, regular oil changes, standard replacement parts, so these should be what? These should be reported on my income statement. These should be reported on my income statement as a expense. Excuse me. Now if the particular expenditure, if we have spent anything on our this particular asset, if it is improving the economic benefit, the benefit which I am going to derive, the value which I am going to derive from my asset, if it's improving that, then we have to capitalize it. That means we have to show it on my balance sheet by adding it in the value of my asset. But if the expenditure is made to maintain that particular asset, then we have to do what? We have to expense it off. That means we have to record it on my income statement. Now what is the mechanics of depreciation? Why do we have the depreciation? Because of the matching principal concept, because of the matching principal asset. So whenever, in whichever year we are buying the asset, we cannot recognize the entire value as what? We cannot recognize the entire value as the cost. We cannot recognize the entire value as my expense, sorry, not as cost, as my expense on my income statement. So I should do what? I should spread it evenly. Right? So when I'm spreading it evenly, how will I spread it? Using depreciation. Okay. So depreciation is equals to what? Depreciation is not the market value. First thing important to remember, and that's what we are doing. So depreciation is the cost allocation. We are allocating the cost. That means we are allocating it among its useful life. Okay, that's how we are doing it. Now net book value and accounting entries. What are the net book value and the accounting entries? So first of all, if depreciation is we are charging the depreciation on any asset which is there for administrative purpose. For example, if there is any maybe equipment, or I should say, if I take an example for say delivery van, or maybe employee pickup and drop van, employee pickup van is there, which is there for admin purpose. So in that case, the depreciation will be debited in the depreciation expense account. But if any asset is there in which we are using it for manufacturing purpose, if any asset is there which I am using for manufacturing purpose, then my depreciation will be attached to my cost of goods sold, and it will be included in my cost of goods sold, which will again go to my income statement only. This also goes to my income statement, but the difference is, if the asset is there for manufacturing purposes, then it has to be what? It has to be attached to my COGS. And in both these scenarios, whether this scenario or whether this scenario, in both these scenarios, the credit entry will be what? Credit accumulated depreciation. Okay, and this is the particular representation of this. First of all, now it is given for how is the flow of depreciation in case of manufacturing assets. So for manufacturing assets, depreciation goes into manufacturing overhead, which again goes to my COGS, my cost of goods sold. Now coming to this coming to this manufacturing overhead will go into the inventory and it will be there as a dead cost in my cost of goods sold. One example is given over here. So what is happening? There is one organization. So organization, they spend, what happens, purchase a heavy duty delivery truck from an overseas supplier. The company pays base vehicle price, import duties and a premium to an engineering firm to install. Now फिर उसके बाद during its first week of the operation, the driver receives a parking ticket. Parking ticket means what? Some kind of fine has been imposed. Okay, in US and in abroad outside India, whenever someone receives any fine or anything on their vehicle, it's termed as a ticket, parking ticket or maybe some kind of a ticket. Okay, now which of these costs should be capitalized and which one should be expensed immediately? The costs incurred, the cost we have paid in bringing the asset to its working condition, in its usable condition. Which are those? The invoice price, the import duties and the hydraulic lift installation. These will be done what? These will be bringing the asset to its usable condition and it has to be capitalized. Now if I am spending anything to expense it immediately, if I am spending anything which is contributing in bringing the asset to its usable condition, then we have to expense it immediately in my income statement. This capitalized one will go to my balance sheet under where? Under non-current assets. This will go under the income statement as my expenses. Okay. One numerical example is given over here. First of all, list price is given over here, cash discount is given over here, shipping fees, installation cost, 1 year insurance maintenance. This is 1 year, that means this is gonna be there in year 2, year 3 and so on until asset is there. So this is recurring every year, so this has to be expensed off, right? Now, and what should be capitalized? So list price is there and cash discount is this much, so 45k minus 2k, 43k is my base price. Then shipping fees is there of how much? 1500. Then installation cost is there of 100 and 1 year insurance cost is excluded. And capitalized machinery cost is how much? It is 45,300. Okay, how did we calculate? 43k plus 1500 plus 800. Another example we have this been given the land purchase price, then real estate taxes, then legal fees, then demolition cost to raise old barn, then proceeds from selling the scrap. This does what? This will reduce the value of my land. If you guys have paid attention, we have already discussed that selling of the scrap reduces the value of the land. And so what will be the value of my land? 2,79,500 after doing this plus and this minus. Now coming to the construction cost for the new building. So for the new building, when we are building the new, when we are making the new building, we are spending 6 lakh on this. So this entire 6 lakh will be the value of my building. Now, one thing important to understand: when to expense and when to capitalize. So if the company did not pay for this specific line item, could the asset safely and legally begin its very first hour of normal operation? That means if I have not paid for a particular expense, without this can a company work? Yes, if the company can work without this particular expense, then we have to do what? We have to expense it immediately in my income statement. But if no, if a particular expense is helping in bringing the asset to its usable condition, then we have to do what? Capitalize it and add it on the value of my asset in my balance sheet. So most of the cases, any costs which is incurred before the first use in order to make it functional, that we have to capitalize, that is to show on the balance sheet. But usually when we expense any cost after first use which is of recurring in nature, that means it's gonna come in year 1, year 2, year 3, or maybe at regular intervals of time, or maybe frequently, then we have to do what? We have to expense it off. Examples are given over here and here for both types of cost. Which cost has to be capitalized, which cost has to be this particular expensed. Now, where we have the top 3 examiner twists to watch for, how examiner can confuse us. The salvage revenue trap. That means whenever we are selling off the scrap, it is recorded as a other operating income. No, we record it as cash debit and land credit. Then post construction demolition. Post construction demolition should be done what? So in that case, what should we do? In that case, what should we do? This is a kind of a retirement loss, not a land setup cost. This is a retirement loss. That means I am selling off a particular land. On that there was a building, and I am demolishing that building. So that will be termed as a retirement loss. I am retiring that particular asset. Then include post acquisition maintenance, like annual service contract, or maybe anything like AMC, we have annual maintenance cost or charges we pay. That has to be recorded where? That has to be recorded on my income statement as a expense. Then what are the common mistakes the students make? We depreciate the land. First of all, students do what? They depreciate the land. Should the land be ever depreciated? No, never. Never land is ever depreciated, guys. Please remember this. Then misallocating factory depreciation. That means if any manufacturing equipment is there, on that we have a depreciation. So that depreciation will go in my COGS. That depreciation will go where? In my cost of goods sold. Then treating salvage gains as revenue. Salvage gains are not my revenue. They are doing what? They are reducing the cost of my land. Salvage gains are what? That means anything we have scrapped, we have sold it on my land, I have cleared the timber. So any money I'm receiving to get that, I have to do what? I have to reduce the value of my land. Then any routine maintenance thing, we have to do what? We have to expense it off on my income statement. These are some key terms which we should be aware of and we should understand, and obviously have to retain. I will not say memorize, learn, or mug it up, because if you understand anything, it becomes really easy for us to implement it in my actual questions whenever we are getting, and we are able to understand things better. How this topic can be tested? So this can be calculation heavy and conceptual. How it can be calculation heavy? Because they can give calculation of depreciation. And how we'll understand? Next chapter which we are going to talk about is going to be on depreciation. So we'll understand that chapter and then it will become really easy for us. Okay. So over here the chapter summary and the memory tricks are given over here for us to understand the things easily. I hope this is clear to all of you. Any questions, any doubts to you guys, please feel free to reach out to us. Thank you so much.